Welcome, this is Samina Nalwala and you're watching the F&O show. Let's first take a look at the top headlines that we're tracking this morning. It's another record opening for the Lal Street. Nifty and Sensex trade at life highs. Broader markets follow. It's a Santa rally. IT index hits a 20-month high. L&T Tech, Infosys, Coforge and Persistent Systems is up 1% each. Meanwhile, Texmaco Rail surges over 10% on order win worth over 100,000 rupees from Railway Board. And SBI hikes marginal cost lending rates by 5 to 10 basis points. Chairman Dinesh Kara tells NDTV Profit that MCLR accounts for 37 to 38% of the lending book. And oil prices rebound after surging 3% on a weaker dollar. Gold prices continue to rise. Well, those are the top headlines that we track. The markets are looking good. The breadth might have deteriorated just a slight bit since market opening, but the broader markets are still trading in line. Agam, is there some Friday fatigue setting in? I mean, this has been a very long run. We've made a new high pretty much every single day from the start of the month. What is F&O data indicating to?
Well, so far there's been no relent when it comes to your move on the upside, because in fact just a while ago we had seen the Nifty move over the mark of 21,300. And it seems like at the moment, while there was some amount of anticipation that we could see a moderation, perhaps about a profit taking, that hasn't come through so far. But potentially in the last couple of hours of trade is where we could perhaps in fact see that profit taking, but that's a wait and watch. For now, of course, we're continuing to see more and more positions being built up towards fresh longs as far as the Nifty is concerned, and then Bank Nifty futures as well. That's where about another 2% added, even as the index remains marginally in the green. Now, when it comes to your options market, as far as your open interest accumulation goes, we're starting to see a lot more around the put side. And that's going to provide perhaps a little bit of support in the near term, around 21,100, 21,000. And of course, on the higher end, we're starting to see a little more activity coming through around 21,500. Speaking of this, let's talk about where we are in fact seeing a change in OI. So sure, puts are the most active at the moment, and I reckon that a lot of this will be positional in nature and not necessarily intraday. But on the higher end, as far as calls are concerned, we're seeing very little coming through. In fact, the 21,000 calls continue to see unwinding. I reckon a lot of sellers are now starting to book some heavy losses there as well. Coming down and talking about stocks, let's pull up the list of all those which are in fact moving in trade today. So we have longs building up in Nalco, Deepak Nitrite, Naveen Fluorine along with the ABB, and HDFC Life on the other hand looking at some shorts building up. And in terms of stocks which are in fact seeing unwinding, well, we are seeing about a short covering for Gujarat Gas, State Bank of India and Hindustan Copper. On the other hand, SAIL and Bosch are under pressure in today's day of trade, and we are looking at some amount of longs unwinding. That said, we continue to keep an eye on the benchmarks, and we're going to have to wait and watch whether or not there is in fact a little bit of profit taking, considering we have seen such a strong week of trade for our markets.
Indeed, Agam. We'll have to wait and watch, but no relent. That's what Agam is saying. At least that's what data is indicating too. A quick check on the top movers on the index. IT once again is leading the way up for the second straight day. Across the IT pack, you're seeing big gainers. Infosys is seeing a big move this morning. In fact, that's definitely worth a mention. While the IT index is up 3.5%, Infi is leading the way up with a gain of 4.5% on the counter. HCL Tech not too far behind, 3.5% rally on HCL Tech. If I can get Infosys and HCL Tech on the screen, that should be useful. TCS is also up with a gain of 3% So Infi, TCS and HCL Tech are your three top gainers on the index this morning. LTIM is also not too far behind, the gain of about 3%. Metals also playing a little bit of a catch-up. So on back of a weaker dollar index, commodities are generally in a sweet spot. So you've got stocks like Hindalco, JSW Steel, Tata Steel. They've all managed to pick up pretty sharp gains in early minutes of trade. So largely speaking, it's a good-looking market. Pockets of interest is IT, metals and chemicals. Railway companies also like Texmaco holding themselves together up with a 10% gain. So all in all, it's a positive session. We've got two special guests joining us on the show right now. We have with us Aditya Arora of Adley Tick Stock Market Research joining in. Aditya, thanks for joining us this morning. No relent. There is no fatigue setting in just yet. Couple of sectors that are trading firm is IT, metals, chemicals are all in a good place this morning. But first up, how would you trade the index? What is the strategy for the Nifty this morning?
Very good morning. I think it has been one-way ride for Nifty and Bank Nifty all the way up. Post the election results, there was fantastic rally. But I think there's some fatigue, there's some long unwinding. Even if you look at derivatives data yesterday, then there was some, some profit booking seen from the institution side. And even if you look today, Bank Nifty is, underperforming compared to Nifty. So I think Bank Nifty has reached a point of exhaustion and resistance. So call writing could be a good strategy for 48,000 call option with defined stop loss. I think there could be some profit booking in Bank Nifty going forward in the next week, and Nifty comparatively strong. But the clear signs are visible on Bank Nifty where I see a mean reversion trade. So we can see some profit booking over there.
Okay, let's get in Aditya Agarwal of Invest for Edu into the conversation as well. Aditya Agarwal, thanks for joining in. How are you looking at markets? What data are you looking at, and what would you do here?
Good morning, Agam. Thanks for the show. Clearly, there's a uptrend and a surging uptrend, despite the fact that the indicators might suggest that markets are sitting at overbought levels and you could see a profit booking anytime soon. But prices are not suggesting that, Agam, not at all. Look at the way the Nifty and the Bank Nifty, and look at the way sectoral indices are just charging ahead. I don't see any reason for markets to correct. Even if there's a correction, slight bit of correction, I think that will be bought into very quickly. I have a slightly divergent view with the gentleman on the show. I think Bank Nifty is a buy from current levels because I see Bank Nifty start to outperform from here on. If anything, metals have performed, your chemicals have performed, cements have performed. It's only the banking index which is left, Agam, to participate in the rally. And it's a matter of time, I believe, Bank Nifty will start to chip in from current levels. And one should actually look at initiating long positions in Bank Nifty. I'm looking at a target of at least 48,300 or 48,400 on the Bank Nifty on the upside, with a very strong support on the downside, closer to about 47,700, 47,800. So I believe there is room for the Bank Nifty to outperform from here. And despite the fact that the indices are looking slightly overbought as far as indicators are concerned, but mind you, Agam, it is the trend. When markets are correcting one way, markets do remain oversold for days, and same holds true for the uptrend. When markets are in a strong uptrend, I believe indicators will remain overbought and markets will continue to outperform.
Aditya Arora, I'll come to you now. I know Bank Nifty would be a more pertinent question, but I want to quickly jump into this conversation on tech. And largely because the IT index has done exceptionally well over the last 2 days. The whole sector is trading firm. The index is up with 3.5% gains. What is the strategy on the IT pack or the IT index, or any stock-specific trades there too?
I think IT trades very firmly on the upside, and there's a good upside, good room over there, good steam left over there. So if I talk about the index levels, then it's a buy at 35,350, and stop loss should be 34,000. Target should be 36,500 to 37. And if we talk stock specific, and then I think Infosys is a good candidate, which could be bought at 1562.50. Stop loss should be 1470, and target should be 1650 to 1750. So that's a long candidate in IT pack.
Right. Aditya Agarwal, I know that you have at least one IT company on your radar today, but I also want your overview on the index itself. How are you playing this? I know that you mentioned that at least the benchmarks are overbought. Is that the case for IT, or is there more legs to this rally?
Oh, definitely, Agam. There's more legs to this rally. And I've always been believing that IT, the day you see a big correction in the IT, you should actually go ahead and buy the index. And that is what we've seen for the past two trading sessions. And I believe if anything, Street is now anticipating that the IT stocks will start to outperform, given the fact that the interest rates will come down. So, and if I take a look at the index structure as well, it looks extremely solid at the moment, Agam. And I believe the large cap IT names will start to chip in now, which have been a big laggard all this while. So your Coforge, Persistent Systems, all of these stocks have performed. I believe it's time for the likes of TCS, Infosys, HCL Techs to start to outperform. And definitely, I believe all three names I mentioned should be looked at from medium to long-term perspective, and you have decent money-making opportunity here.
Okay, all right. From there on, let's talk about a little bit about the mid-cap index as well. Now, I know that we've seen the mid-cap and the small-cap indices move in tandem with the benchmarks, but there's just been a little bit of an underperformance, naturally, because all the focus has been on the benchmarks, and that's also on account of a lot of cash flows coming in from FIIs along with DIIs. Now, we also have a little bit of an increased activity in the select mid-cap IT options as well, considering this is something which has been introduced very recently. And that said, we have the weekly options expiry every Monday as far as the mid-cap index is concerned, though that specific options expiry. Keeping that in mind, Aditya Arora, do you have any views here? How would you play this one, especially given we are looking at that weekly options expiry this Monday?
I think it's steadily moving up along with the main index, that is Nifty, Bank Nifty. So it's following the footsteps of Nifty. Until and unless Nifty is inching up, mid-cap Nifty would also be in line going up. I think next week I see some profit booking in both Nifty, Bank Nifty. So my outlook would be neutral to bearish on mid-cap Nifty.
Right. Mr. Agarwala, what is your opinion on some of these metal names and tech names? Any strategy to approach the tech pack? I mean, the rally has been pretty sharp, so I know it'd be difficult to sort of strategize something. But for the next couple of weeks till the end of the year, anything that you do there?
Oh, you should definitely look at going long on the IT and metals as well. Absolutely. So let's talk about metal first. I believe there's a fresh breakout in the metal index as well. And you look at the likes of JSW Steel, you look at Hindalco, you look at Tata Steel, you look at Jindal Steel. All of them have been roaring this week, and I believe and most of them are trading at a lifetime high. And still they don't look extremely overbought on the chart structure as well. So I believe one should keep looking at opportunities in the metal pack as well. And then there are money-making opportunities here. To name a few, I believe Tata Steel, JSW Steel, and Hindalco. These will be the top three bets in the metal index. And if you see a bit of correction here, maybe at the end of today or maybe on Monday, if you see some bit of profit booking, they will give you a good opportunity to go long in the metal pack. Talking of the IT name, I believe, as I mentioned, one should look at buying opportunities in IT as well, because I believe this is the time IT will start to outperform. They have been underperforming big time for a good 1.5 years now. So one should definitely look at IT stocks, and I would stick my neck out with the large cap IT names. The three stocks that I mentioned earlier in the show, TCS, HCL Tech, Infosys, these are the three stocks I believe will continue to outperform. And if any correction is seen in these stocks intraday dip, they will provide an excellent opportunity to go long.
Right. So Aditya Agarwal, take us through JSW Steel and AU Bank as well with respect to your calls there.
So Agam, I've got a buy on JSW Steel for a target of 910 with a stop loss at 850. If you look at the chart structure, it's clearly broken out from a trendline resistance, and volumes are suggesting the same. One should look at going fresh long on JSW Steel at current levels as well. And in the banking space, as I mentioned, I believe there is some money-making opportunity there. So AU Finance Bank is something which is broken out again from a resistance and looks solid on the charts, Agam. So one should look at buying AU Small Finance Bank for a target of 795 with a stop loss at 750 on the downside.
Right. Aditya Arora, I believe you've got two long calls on REC and Tata Steel. Can you take us through those calls, please?
Sure. I think I have one long call and one short call.
Okay, sorry.
So the long call is on Tata Steel. So the long call is on Tata Steel. I think the sector itself is now gaining a lot of momentum. It had made its base in last 1 to 2 months, and now there are a lot of tailwinds for the sector, like dollar index has been correcting steeply. Federal Reserve policy is now more dovish than hawkish. Rate hikes are coming earlier than expected. So this is very bearish for dollar index and very bullish for commodity. So commodities usually gain when dollar index corrects. So that's a positive scenario for the sector itself. In that, I like Tata Steel, which along exposure can be seen, long build-up can be seen in the counter. So this over here, the option strategy would be to buy 130 call, currently trading at 6 rupees. 3 rupees should be the stop loss, and 10 to 13 rupees should be the target. And second one is REC. I think REC, PFC, and all the electricity counters saw parabolic move. Now they are at point of exhaustion and resistance, and a lot of long unwinding is being seen over there. So REC 450, 445 put should be bought at 19.55. 14.95 should be the stop loss, and 25 to 46 should be the target.
Right, absolutely. REC, which was on a tear, perhaps looking at a little bit of fatigue, and that's the reason why Aditya Agarwal is suggesting, Aditya Arora is suggesting buying a put there. But on that note, I'm going to take a moment to thank both our experts, Aditya Agarwal as well as Aditya Arora, for joining us and taking us through their views on the markets. And on that note, we slip into a short break, but on the other side, we get you a management of Jupiter Wagons. Stay tuned in.
back. You're watching the FNO show. We'll do a little bit of a detour and talk to Vivek Lohia, MD of Jupiter Wagons, about their recent order win and the outlook for the company. Hi, Vivek. Thanks for joining in. The stock, of course, is reflecting the euphoria that the street and investors feel about or feel for Jupiter Wagon. We'll start by talking about the recent win that you've had, where you've won a pretty significant order from the Ministry of Railways to the tune of about 1,600 odd crores. Can you talk to us about that and also tell us where will this take your current order book at?
Good morning, and thank you for welcoming me to the show. So, as you mentioned that, yes, it's a substantial order book, and these are again modern design wagons, especially for the DFCC, and they have a capacity of about 25-ton axle load. And going forward, you're going to see more such wagons. There is another tender which is out for another 10,000 wagons, which is going to be a complete new design wagons, which we need to offer to the Indian Railways, again with 25-ton axle loads and with completely new bogies and other features in it. Currently, our order book with this order, if you add, is close to about 7,000 odd crores. Which, given the order book, we are sitting very pretty. I think till about FY25, we are completely, in terms of the order book, we have a very clear visibility.
Right. Vivek, just a couple of other follow-up questions on this. Could you tell me the timeline for completion of this order, and when will the same reflect in your earnings? And what are the margins of this order?
So in terms of completion of the order book, it will be mainly, the execution will mainly be in FY25, and it will get extended to FY26 also. Currently, the current order books which we have in hand, we are in the process of executing the same. Capacity today, we are producing close to about 750 wagons a month, and the idea is that by next financial year, we are looking to ramp up the capacity to about 1,000 wagons. We have done a substantial capex for our foundry as well as on the wagon fabrication side. We have done also backward integration, where we have added brake systems not only for our freight business but as well as for the passenger business. And now we are looking at adding capacities in terms of manufacturing of wheel sets also.
Right. Well, I want to quickly pull out what Jupiter Wagons has in fact done, and by that I mean the share price over the course of the 1 year, because it's been a great year for this company. It's been a multi-bagger, and in the last 12 months it has moved up by as much as nearly 280%. A lot of this is also on account of the fact that the government's impetus, the government's push in the railway sector has been tremendous. Case in point, in the latest, of course, we also have, we understand from, news reports that we are set to see orders worth 1 lakh crore rupees coming through over the next 5 years. This is a statement coming in from the Railway Minister, Ashwini Vaishnav. And this, of course, could be significant for the entire sector. Vivek, if you could come in on this one, what sort of a visibility are you looking at based on your conversations with clients? Of course, I reckon the government will be one of the biggest clients here. What sort of visibility can you shed light upon when it comes to a 5-year view?
Yeah. So Railway has been very clear. Our Honorable Prime Minister as well as the Railway Minister, their roadmap has been very clear. As you know that today India has when it comes to the logistics costs, we are one of the highest in the world. Our logistics cost is close to 13%. And if India has to, compete in the global space and become a $10 trillion economy, the logistic costs need to come down substantially, and railway is going to be the key driver towards it. So there has been now substantial investments in terms of the railway infrastructure, and we are very confident on in terms of future requirements. As you said, the Honorable Minister just announced close to 100,000 new rolling stock fleet. There is, besides this itself, also there's a substantial demand which we see in the private sector, because now we are seeing a lot of flow of private capital, especially on the infra side, which is happening. As you're aware that there's substantial steel as well as cement capacity being added. There is a lot of intermodal kind of movement which is there. So all that I think will contribute to a significant capacity growth. Our focus is now, not so much in terms of whether we are concerned on future order books. I think that is we are considering that to be a given the kind of vision the government has set for itself. They want to increase the loading capacity of railways from currently around 1 billion tons to close to 3 billion tons by 2030. And it will be, again, that will require a complete revamp of the existing fleet. So our focus is more on the execution side, and we have been constantly putting in capex towards expanding our execution capabilities, both forward as well as backward.
Right. Good times ahead, Vivek. Good luck. It's looking like it's going to be a very promising couple of quarters for you. And the stock, of course, is reflecting the euphoria. It's trading positive. It's up over 200% in the year. So things looking up for investors and the company too. 2.5% on Jupiter Wagons is what we have. With that, the markets are holding steady too. The index continues to trade at its life highs. We'll take a break. We'll come back. But there's a lot more action on the other side. So stay tuned.
welcome. You're tuned into the small and mid-cap show. I'm Hiral Dadia. Let's quickly dive straight into the headlines for the day. Another record week for the markets. Nifty surpasses the 21,300 mark. Sensex crosses 71,000. IT index hits a 20-month high, up over 3% in trade today. All constituents on the IT index surge. Infosys gains 4%. Meanwhile, Texmaco Rail surges over 10% on an order win worth over 1,000 crores from the Railway Board. And SBI hikes marginal cost lending rates by 5 to 10 basis points. Chairman Dinesh Khara tells NDTV Profit that MCLR